Hello, this is Naresh Karamchetty. Today I will talk about on-balance volume. On-balance volume attempts to measure the level of accumulation or distribution by comparing volume to price movements. Volume is added to the indicator if closing price moves up and subtracted if closing price moves down. The basic assumption regarding on-balance volume analysis is that on-balance volume changes precede price changes. The theory is that smart money can be seen flowing into the security by a rising OBV. When the public then moves into the security, both the security and the on-balance volume will surge ahead. OBV is generally used to confirm price moves. The idea is that volume is higher on days where the price move is in the dominant direction. For example, in a strong uptrend, more volume on up days than down days. Volume provides important secondary confirmation of the price action on the chart and often gives advance warning of an impending shift in trend. As a rule, heavier volume, marked by larger vertical bars at the bottom of the chart, should be present in the direction of the prevailing price trend. During an uptrend, heavier volume should be seen during rallies, with lighter volume, smaller volume bars, during downside corrections. In downtrends, the heavier volume should occur on price shifts. Bear market bounces should take place on a lighter volume. In a ranging market, rising OBV warns of an upward breakout, while falling OBV warns of a downward breakout. However, in a trending market, bullish divergence between on-balance volume and price warns of market bottoms, while bearish divergence between on-balance volume and price warns of market tops. The OBV is in a rising trend when each new peak is higher than the previous peak and each new trough is higher than the previous trough. Likewise, the unbalanced volume is in a falling trend when each successive peak is lower than the previous peak and each successive trough is lower than the previous trough. When the OBV is moving sideways and not making successive highs and lows, it is in a doubtful trend. There are two ways in which the unbalanced volume trend can be broken. The first occurs when the trend changes from a rising trend to a falling trend, or from a falling trend to a rising trend. The second way the OBV trend can be broken is if the trend changes to a doubtful trend and remains doubtful for more than 3 days. Heavier volume accompanying the breaking of trend lines and support or resistance levels lends greater weight to price activity. If prices are rising, but the unbalanced volume line is flat or falling, that means there may not be enough volume to support higher prices. In that case, the divergence between a rising price line and a flat or falling OBV line is a negative warning. During periods of sideways price movement, when the market trend is in doubt, the OBV line will sometimes break out first and give an early hint of future price direction. An upside breakout in the unbalanced volume line should catch the trader's eye and cause him or her to take a closer look at the market or stock in question. At market bottoms, an upside breakout in unbalanced volume is sometimes an early warning of an emerging uptrend. If the security's price movement precedes OBV movement, a non-confirmation has occurred. Non-confirmations can occur at bull market tops when the security rises without or before the unbalanced volume, or at bear market bottoms when the security falls without or before the unbalanced volume technical indicator. When the unbalanced volume changes to a rising or falling trend, a breakout has occurred. Since OBV breakouts normally precede price breakouts, investors should buy long on unbalanced volume upside breakouts. Likewise, investors should sell short when the OBV makes a downside breakout. Now you have an understanding of unbalanced volume and its applications. Till next time, good investing.